Hello everyone. A very warm welcome to the 8th edition Great Indian Family Office and Promoters Capital Investment Summit 2026. I am your host 𝐭𝐡𝐢𝐬 and currently with me we have Mr. Sheetal Soni, the founding partner at MICS International. Hello sir, a very warm welcome to you. Could you please introduce yourself?
So, myself Sheetal Soni, I'm based out of Dubai for last 22 years. I'm running this firm called MICS. We are a Dubai-based finance, investment, structuring advisory firm. In simple terms, I call it as we solve the problem statement of wealthy people. And you know what, wealthy people do have a lot of problems. And the first problem is wealth, so we manage money. The second problem is they don't want to pay taxes, so we focus on international taxation, quite a bit for global family office and diversified asset across sectors as well as jurisdictions. And the third is succession. Jindagi ke saath bhi, jindagi ke baad bhi wale structures, which continues and most efficient structure managing the family dynamics, governance and all that. So this is our core we focus on.
On that note, I would like to address my very first question to you. How do Indian family offices differ from global peers when it comes to risk and long-term thinking?
See, Indian family offices, India is creating a lot of wealth. We have seen in our generation, a lot of Indians, have created wealth by creating liquidity events, by creating great startups, great companies. And, we have seen what India is going through. The global family offices are relatively more mature. They have Indian family offices have who have survived. We always say here that it's a 3 generations stuff, right? One who creates, one who grows, one who destroys or whatever. In global family offices, we have seen this cycle, but a lot of families have survived many other kind of events, risks that they have seen across the world and many generations. We will see that Indian family offices will mature. There are a lot of and that's where the evolution will continue with the growth of India and the capital generation that is happening in India. So I would the family offices who I would see significant asset allocation mismatch I am seeing as far as India is concerned. Global family offices are a lot more diversified globally, while Indian family offices are highly concentrated on, say, India and also on certain asset classes in India. They have their own reasons, like say for example, somebody has created wealth from real estate, highly concentrated on real estate, but in order to be able to survive across cycles, across different time horizons and all that, I think Indian family offices will also mature and diversify a lot more into liquid asset class and also beyond their businesses and also beyond India and single currency.
Okay, that gives us a lot of clarity. What's the most misunderstood aspect of setting up a family office in this ecosystem today?
See, I see it all the time. I mean, and the investors chasing returns. Kahan pe paisa ban jayega? Where can I make most of the money and all that? I think this is one part of the puzzle, as I mentioned to you, right? Family offices should look into 3 parts, which is wealth, making most money, not most money in a given year, but the most money which you can make over the long period of time. Correct? That is one thing. The second is, of course, they should do more governance, successions and all that side of thing. And we ignore taxation a lot of time, right? Particularly when it comes to global investing, there's a lot of more cross-border issues comes into play. Other taxes which we don't see in India comes into play and all that. So, going back to your question, what was the question again?
What's the most misunderstood
aspect is, I feel that, making the most return, right? I think should be about sustaining the family wealth. Survival is the key. World is a very volatile market. We should know that to be able to survive, and when you need money, you should have it, right? So that kind of a money should be a source of bliss rather than source of stress. So in the process of making that money, you should not forget survival, and one should not forget, that you should enjoy the process of making money as well. And don't forget to plan succession and optimize on taxation.
Fair point. That leads me to my next question. From a family office perspective, What does good structuring mean today, especially in the context of cross-border investments?
See, when it comes to cross-border investing, we in India always feel that India is a huge market, correct? And India has its own complexity. Once we have dealt with the complexities of India, I think we can deal with any complexity anywhere. So that's a good starting point as far as we Indians are concerned, right? And the family offices in India is concerned. However, there are certain elements and there are certain aspects when it comes to global investing, which one should keep in mind. Like, because in global investing, what happens is that investee company is somewhere else, or investing product is somewhere else. It is listed somewhere else. Your structure is somewhere else. So there could be instances where the tax claim by not only one authority, the tax claim can be from some multiple authorities, right? So say, for example, in India, you are dealing with only income tax department in India, for example, right? So, but when you are creating a global structures and going for a global investing, you need to navigate this international tax principles well, where the fight cannot be only between you and the tax authorities, but the fight is between the two different tax authorities as well, apart from you in between. So these things needs to be navigated well. You need to understand the DTAs, double tax avoidance treaties. You need to understand cross-border withholding taxes element. And one important point, thankfully, Sam Pitroda created an awareness about that point in India, but nothing, so far we are in a safe zone in India. It's called estate taxes. So we don't have, fortunately, estate taxes in India, but I see the awareness of this particular point very less when it comes to global investing. I'll give you an example. If you are an Indian investor, investing into, say, US registered shares or securities, you are subject to 40% estate taxes. People go about this seeing the returns that the global markets have given them, but completely miss on that part. Imagine half of your money is taken by the government before it goes to your children, right? So these are the things that one should know, one should navigate well to be able to create what I call as efficient frontier of wealth.
Fair point. So, Mr. Sheetal, before we close, one last question. If you had to leave family offices with one principle from this framework, what would it be?
See, a lot of family offices are about, managing the wealth, creating it and managing through across generations, right? And if you are born in a very wealthy family, correct, I would say that life is 50% luck and 50% what you do with the luck, correct? And the managing the wealth is a very different subject compared to creating the wealth, correct? Sometimes what made you wealthy may not necessarily the same set of habits will keep you wealthy, correct? So you keep taking risk. Maybe you have taken very high risk on a startup and it worked well. The cosmos aligned to make you successful apart from your hard work, no denying to that fact. But when you want to sustain it over a long period of time, right, you should have two strategy, I say, core and satellite. Core, you should survive any crisis. Tomorrow, nuclear bomb, goes on your, in your country, or your, anything that happens, which you have not thought of, correct? I think you should be able to survive, right? That is your strategy. And the satellite is, you keep on taking the bets. Many times you learn, many times you win, correct? Keep on taking that bet and apply that core satellite strategy, that your survival is not in any problem, in any extreme scenario which you are not able to think of. When COVID came in, nobody thought the COVID will come in, correct? I'm in Dubai. We are based out of Dubai. And, Iran risk was always there in the bank credit notes and risk notes for last 20, 30, 40 years. But we have never seen Iran bombing us, correct? Like, for the first time, they bombed us. The people who were investing in Dubai real estate never thought that, okay, there could be a bomb that will fly on their, or the missiles that will be flying on their head and all that. Now you are seeing the problems in the real estate market in Dubai, right? And this can happen in everything which made you good money, right? It was on a bull run for last 4 or 5 years, and everyone thought it's a very good, asset class to have, and all that. So survival is one single word that you need to focus on while managing your family office and investments, which will continue to keep you wealthy, right, and maintain your lifestyles and all that. So that is something that you need to do with this approach.
Thank you so much. Thank you so much for sharing this wonderful piece of advice. It was a pleasure having you with us today. Thank you very much.
Yeah, thank you for having us here. It was interesting to meet a lot of variety of people, family offices in this event, and learn different perspective.
Thank you very much.
Thank you.
Stay tuned to know more what's happening in the Family Office Decision Series by Transformance Forums. Thank you very much.